Hello, I'm Saharsh Kumar. I am currently working as an equity strategist with focus on economics. By education, I have completed my master's in economics and I'm a research analyst by profession. I have a total of 11 plus years of work experience and I worked for 5 years in JP Morgan covering APXJ EMEA equity strategy team and key sectors like EMEA telecom and European luxury goods. Over last 12 to 15 months, global economy has been gripped with uncertainty, tighter liquidity and declining growth dynamics. Here, India comes out as the fastest major growing economy in the world. According to IMF, India is expected to contribute north of 15% to global growth in next 3 to 5 years. We underline the following theme for Indian economy near term as well as long term. A robust 15% plus credit growth expansion while the household debt to GDP in India languishes at mid 30%, which is actually half of that of China. We are bullish on India's growth story and see banking sector as the biggest beneficiary of it. We also expect rate normalization in 2024, which could further give boost to the real estate upcycle. We have roughly 1.3 billion registered on Aadhaar. Currently, there are 10 billion monthly transactions via UPI. As far as inclusion is concerned, what could have taken decades has happened in few years. We focus on the new age startup companies with focus on profitability as the best way to play this theme. For FY24, India has a target of USD 120 billion, which is 37% higher on a YOY basis. Out of this, more than 50% have already been met. Since December 2020, India's quarterly GDP growth has averaged 7.5% YOY. 60% of it is driven by gross fixed capital formation, which is largely driven by government capex. Direct beneficiary to this would be infrastructure, construction, cement, and steel industry. Consumers in India are demanding better quality, better value, better feature, and that is where brand differentiation has been the key. In our view, auto manufacturers have benefited the most as their realization has picked up even when the growth volume has been subpar. We also like white goods stocks, but we do see that due to heavy competition, the margins might be compressed in near term. During the pandemic, due to supply side disruption and amidst growing tension between US and China, world started looking beyond China for alternatives. Most importantly, Apple started looking outside China. As of April to May 2023, Apple exported iPhone worth USD 2.5 billion from India, which was double when compared to the same period last year. Companies benefiting from the shift in the supply chain would be our preferred pick. Consumer demand has been relatively subdued, but we see this as a minor hiccup on India's growth story. If we look at IIP data, then consumer goods production growth has underperformed by 0.8 percentage point for 2023 when compared to its weighted growth. Higher inflation and interest rates have made the consumer more prudent toward discretionary spending. However, we see this as a near-term phenomena and one which is likely to subside as we close into the start of rate cut cycle. According to some of the media reports, India's middle class household is expected to grow from the current 31% to 61% by 2047. We also see trends of premiumization here. Mass segment can pick up with normalization of rainfall, reduction in unemployment, and ease in inflationary pressure. We continue to remain bullish on India's robust consumption story and see the current slump in consumption demand as a mere hiccup on the long-term trend. We stay cautious on the export story, but with exceptions. According to IMF, world trade volume is expected to slow down to 0.9% for 2023, but rise to 3.5% in 2024. The recent Ukraine-Russia war led to supply-side disruption, rise in oil prices, and now it has started pushing food and energy inflation back up. India's export on an average declined by 6.4% 6% YOY monthly in 2023, while imports declined by average 9% monthly for 2023. But we have seen green shoots in software services, pharmaceutical, telecom equipment exports. We remain cautious about the overall export demand outlook, but we like to focus on IT services companies where they get greater share of revenue from US and rest of the world versus Europe. And we look at pharmaceutical sector also positively. We understand that valuation might be stretched in India, but if we look historically, India has always commanded premium on valuation over its EM peers. We present the risk to our view. Geopolitical risk. Any substantial escalation in the current geopolitical risk scenario changes the dynamic for policymakers and leads to negative impact on broader equity markets. Next, food inflation spiking on the back of lower reservoir levels and warmer winter weather. It could negatively impact the much awaited pickup in the rural demand. Last risk. Private capex continues to remain muted. Government capex traditionally have tended to crowd out the private capex. With manufacturing capacity currently at 76%, we are seeing capacity expansion announcement in automobile sector, cements, etc. We view this as a risk for 2024 as there is expectation of private capex picking towards rate normalization. If it does not happen so, then we view this as a risk for Indian equities. Thank you.